Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup, as well as the Nifty strategies for the day as well. Top market experts will be joining in to help you understand the macro as well as the micro, both the fundamentals as well as the technicals that you need to keep in mind for the trading strategy today. Let's start off with the recap first. The Nifty extended its winning streak for the fourth consecutive session as of yesterday, closing at an 8-month high. Remember, on the first day of the week, we have seen that the Nifty held on to levels above 25,100, recording its highest closing level of 2025. Meanwhile, it was the Nifty Bank that hit a record high level for the second straight session as well. And we also did see that the Nifty Bank crossed over 57,000 mark for the very first time as well. Now, the Nifty Small Cap Index continued its remarkable upward journey for the sixth consecutive session as well. So the broader markets were definitely outperforming the benchmark indices, with the Small Cap Index now at a new 5-month high as well. Now, as far as the global markets are concerned, they were seen inching higher on optimism around US-China trade talks. Remember, China's May exports to the US were down 34.5%. Meanwhile, what's happening is that the US-China trade talks details have come out limited as of Monday. Commerce Secretary Lutnick has talked about the trade talks being fruitful. It was the Treasury Secretary that has said that the meeting was a good meeting. Bloomberg has reported that the US is willing to remove restrictions on some tech exports in exchange for China easing limits on the rare earth shipments as well. So that's something that is being reported. But of course, some more details will come out today, and that will set the tone for the global markets as well. Of course, overnight, the S&P 500 inched up slightly. The Nasdaq Composite climbed by 0.3%. The Dow Jones also ended absolutely flat in trade. Following this, the Asian markets also edged up this morning. What we've seen is that they are optimistic about the US-China trade talks, and that's why they were seeing some positive signs throughout the course of the day. We saw Hang Seng, Chinese index, Nikkei, Kospi, all of them are up and about in trade, especially the Japanese index that was up by almost 1%. Now, the GIFT Nifty is also indicating a positive start for the day as well. So that's something that we are also going to be looking at as well. Let's in fact welcome our guest on board. We have Dharmesh Kant, the head of equity research, Chola Securities, now joining in on the program with us. Dharmeshji, warm welcome to you. Good to have you with us. Help us understand first your thoughts when it comes to the markets overall. We have been seeing this slow and gradual recovery into the markets, especially with the Nifty Bank now at record levels. We are seeing even the Nifty crossed over 25,000 mark, and we are setting our eyes now back again on the erstwhile highs of 26,277 that now seems visible, at least in our line of visibility. How would you look at the market sentiment, which is on a gradual improvement radar, sir?
Yeah, good morning, Sakshi, and good morning to all our viewers. The market is now fairly poised with this kind of front-loading pro-growth policy which RBI has done. I think it should have been done a few months back with 50 basis point rate cut. Anyways, it has come through. And government has left no stone unturned as far as the growth is concerned. So be it RBI policy or the tax benefit through budget, weather forecast is also in line and sync with the growth trajectory of above normal kind of a monsoon. Inflation is down, and the biggest worry was that because of this Trump tariff related things, there may be a commodity inflation which can be bursting out of proportion, which has not happened. So if you look at the dollar index trajectory from 90 to 113 and back to 99 kind of a level, so it's fairly muted kind of a currency play. Initially, the noise flow surrounding everything and permutation combinations and the various calculations had the kind of a topsy-turvy kind of a move in the market. But now, as we speak, everything is settling down, and July 9 is nearby. So I think the hope trade that consumption will pick up because of all this positive flows which are surrounding and the positive incentives, the policy incentives the government has given. So market will behave in a positive manner till first quarter earnings are rolled out. Earnings are not important; they would be muted. What is important is the management commentary when they roll out their earnings, how positive they sound, and that is critical. In between, benefit of doubt market will take, and I think scaling up to new highs is a very likelihood. One more point, Sakshi. India's tariff deal with the US is disinflationary in nature because imports would be cheaper. local competition to match the imports, again the prices would be lower. So it will be a consumption boost to the, I mean, India as a country, though there is minor loss on the exchequer front, but that's okay, given the fact that we are now looking at directly at the growth trajectory. So, to my mind, you have to be economy-facing sectors, all sectors which face directly the economy, and that is where the trade lies for, I mean, 1.5 months or so.
Dharmesh ji, we're also looking at, meanwhile, I'll just point out to all our viewers, 25,200 and upwards of that is what is being indicated in the pre-open for now, 100 points of an uptick on the Nifty. So yet another positive start is what we can look at. But block deals and large deals that are taking place on the D Street, which are unstoppable. Even yesterday, we saw Wipro talking about that, block deal as well. And now we have Premier Energies, 5.5% equity worth about 2,629 odd crore rupees has already exchanged hands today at the rate of 1,052 rupees per share in the block deal window. So what do you make of these unabated block deals that are taking place, promoter exits, promoter stakes pairing at this point in time? Because, these are fairly large deals. Cumulatively, over 60,000 odd crore rupees is already done in May, and it continues in June as well. How would you really explain to the retail investor what's going on?
Sakshi is exchange of hands. I mean, that is how the economy performs. There's always a buyer for the second leg of the growth trajectory. And I mean, if you go a year back, so last year, same time, same period, we were looking at promoter exit of more than 1 lakh crores of equity. So when the market was, riding high, and these are the promoters who have been invested into their respective businesses for more than, 20, 30 years. At the same time, they are still invested. They are not exiting the company altogether. So that is how, the market behaves. So I don't think there's much to read into that. I mean, this caution is the word which people would like to coin this kind of exit. I am not looking at that because the businesses are quite robust and doing well. In fact, all the companies in which they were promoter exits a year and a half back or for a period of regular 1 year, all those companies are doing well and they are trading above their prices at which the promoter exit was there. So take it in the stride, and one has to look at companies where sustainability of earnings is there. Point number one. Point number two, there is a growth which can justify the valuation multiples. If these two things are in place, you would be making money. And one more point, actually, out here. This bull market, the next leg of the bull market, would be a market where it would be a secular trend where every stocks are going to run up. Now it would be more of a quality companies with solid businesses. Those are the ones where you will find the traction going forward, and those companies will be expensive. They won't come cheap. So that one has to be mindful of expensive valuation with good businesses in place.
Absolutely. Before we go ahead and discuss a few stock sectors, themes where Dharmeshji is positive on and what's really happening right now, we should also keep an eye out on what's happening globally as Indian representatives are also, making a point. Indian policy makers, Commerce Minister Piyush Goyal, who's on a two-nation tour to Switzerland and Sweden, has reiterated as of yesterday that India is taking a practical and forward-looking stance in the ongoing trade discussions in the United States, emphasizing that the talks are progressing behind closed doors and not through media headlines. Let's listen in to what the Commerce Minister had to say.
Because has been on FTAs with all the advanced countries. We entered into an FTA with UAE, Australia, UK, the 4 EFTA countries, Switzerland, Liechtenstein, Norway and Iceland. We are in active dialogue with the European Union, with whom faster than you would expect we will hopefully finalize a very robust free trade agreement. We are in active dialogue with the United States of America for a bilateral trade agreement which the two leaders, President Trump and Prime Minister Modi, announced in February 2025. We have already launched negotiations with New Zealand, Chile, Peru. We're in active dialogue or if I may say more than active dialogue, to conclude an FTA with Oman. So India is now going from a position of strength and working with self-confidence. India under Prime Minister Modi goes out and negotiates on the principle of reciprocity and the confidence of a country which doesn't fight shy of competition but is willing to engage in a spirit of complementarity with advanced economies of the world.
Since you mentioned the trade deal talks with the United States, can you share with us any latest updates? What are the challenges?
Well, I've never discussed details of any free trade agreement negotiations in the press. Negotiations are held in a closed room. Decisions and outcomes are shared with the press.
Let us now go across to Business Today's group editor, Mr. Siddharth Zorabi, who is covering this visit and really find out the key takeaways from Piyush Goyal's press conference. Siddharth, help us understand, what is the Commerce Minister really indicating? What is the significance of the looming July deadline when it comes to reciprocal tariffs?
With the 90-day deadline for Donald Trump's reciprocal tariffs to come into effect in July, India has been working and holding multiple rounds of talks with the United States on a trade deal. And while there have been delegations that have come from both countries and have held extensive talks, a very important update was provided by Commerce Minister Piyush Goyal here in Bern today, when he indicated that India would continue to adopt a pragmatic approach towards trade negotiations with the United States. Earlier, US officials have said that they were close to a trade agreement with India and negotiations have continued. Piyush Goyal making that point today in response to a question that perhaps everything does not need to be perfect in the first phase, and there could be the possibility of low-hanging fruits being addressed. He gave examples of other trade deals that India has struck in the recent past, basically underlining a pragmatic approach towards what is clearly a very, very important moment for world trade and particularly for India. We've seen what the United States has done in the context of its conversations with China, as well as the United Kingdom, and therefore India, which has been pursuing engagement with the world with regard to trade, is clearly adopting a very, very balanced approach towards the conversation with the United States. In fact, Piyush Goyal also making the point that such conversations cannot be made public or really discussed in the media. But there's another very important aspect to what India, the Commerce Minister, have been up to. In less than the past 1 month, Commerce Minister Piyush Goyal has been in 7 countries, including 2-country visit, Switzerland and Sweden, in 4 days. And very clearly, the importance of having bilateral trade agreements with multiple nations is extremely crucial for India's trade as well as export-driven economic growth.
All right. Thanks a lot, Siddharth, for sharing with us all of those key updates from the very crucial visit of Commerce Minister Piyush Goyal to these 2 nations and what's being indicated as far as the trade talks are concerned. Then, Meshti, coming back to you, just like how Siddharth mentioned, and you must have also heard the Piyush Goyal statements talking about, how India is taking a very pragmatic approach, a balanced approach when it comes to the trade talks. That was already being anticipated. But why the nerves are actually getting onto the head is right now because we are just 1 month away from that crucial deadline. So far, there is no indication of whether there is any deal in the works. Of course, there have been time and again some statements from US government, but there is no clarity as to which way is India going to be going at this point in time. The markets have slowly and steadily come back onto the, positive upward trajectory, back above 25,000. Is there any risk to this recovery because of the trade talks?
No, Sakshi, I don't think so. There is any risk because such kind of a trade settlement doesn't happen overnight. In fact, 1 month, 2 months is a very short time because
Yeah.
before Liberation Day, Nobody knew what kind of tariff is going to come, and still nobody knows what kind of tariff settlement is happening. So this is a resetting. It normally it takes 1.5 year to 2 years time frame because there are thousands of several products, byproducts, imports, and everything has to be negotiated. Because there's a chain and rippling effect. It's not so easy to get it through. What they will do is a broad parameters can be outlined before, like India did with UK. So such kind of a broad parameter, tariff framework can be ready by before 9th of June, and then again it will be negotiated. To my mind, we were working with say 10-11% kind of an Nifty EPS growth for FY26. With this kind of a policy incentive, again the caveat is consumption should pick up, and consumption is not in the hands of government or any industries or any policy. It is in the hands of the people. If it actually picks up, then this can get reset to 12 to 13 to 15% kind of an EPS growth, having regard to the tariffs which will likely be built into the system. So that would be a good growth. Then there won't be any risk to this upside which we are seeing, because 1150 is the reported EPS which Nifty 50 has reported. And on top of that, if you are ending with 1300 kind of an EPS, so even 20 times, which is a bit lower than 20 time historical average, you are at 26,000 kind of a Nifty level. So to my mind, things looks to be pretty settled. And as I said, it won't be a secular move. You have to be, company specific. So there would be multiple outliers in every sectors you track, and those sectors and those companies are likely to keep the market upswing. I can safely say that we are out of the woods. All the problem, the hurricanes which were there, is through with the market, and if it is business as usual now for the market.
Absolutely. So business as usual for the markets. That's a positive at this point in time. Let's quickly look at some of the sectors and the stocks and how they are indicative of opening. So the Nifty is indicative of an opening above 92 points higher, 25,196. We're also looking at all the sectors that could be opening in a positive zone as well. Banks, financials could again be in focus. Shriram Finance, Bajaj Finance could be the ones could be leading this space. You also can see some momentum on the IT stocks as well. Some pickup happened yesterday, but we'll see probably if that catches some more pace. Broader markets which have been showing more resilience and outperforming the benchmarks could again be showing some strength. Metals could also be in focus in trade today. We'll also keep an eye out on the defense stocks, railways, PSU stocks which have started to garner some pace as well. Dharmesh ji, on the defense moves, are you now getting cautious after the recent run up, or do you still believe there's a lot of steam left here?
See, Sakshi, if you're a trader, you need to take your profits now from the table. Because before this monetary policy, they were the safest bet. But now with this monetary policy swing, the other economy, the major economy opens up for buying opportunity, and the stocks there are cheap compared to the different stock on the valuation multiple. So if you are long-term investor, stay invested. No need to worry. There can be 5-7% kind of correction even for market. When we are seeing we are in a safer zone, what we are meaning to say that even if there is a correction, one should be buying into those corrections, and eventually the market will pick up in a shorter span of time, not that 6 months or 7 months later. So that is the idea. Defense definitely, even railway infra, to my mind now, it's time to take profit for our traders. If you're an investor, stay invested for 3 to 5 years, because that trajectory, that story remains intact. For the timing, going by the arithmetic of valuations, there can be a time range kind of a consolidation happening in both these sectors. So traders, please book out, and investors can stay invested.
Investors can stay investors, but traders must definitely look to pull out some money there. When we also talk about the renewable energy space, have you been looking at some of these stocks of late? What catches your attention, sir, here?
So, this entire space has been buzzing, and see, one aspect about this entire power generation space is the debt equity mix is 25%, 75%. 75% is funded kind of a project. So, with this 100 basis point kind of a rate cut, when they come up for renewal of their debt book, it would be at a lower cost. So, that will directly add into the profitability of most of the power generation companies. And there, I think, as the theme is renewable energy, because any new capacity setup is coming in the form of renewable energy, so that's likely to keep on buzzing. Our top pick in that space has been NTPC Green Energy, And the reasons are obvious. The company has already doubled its capacity from last year to this year. And going forward for next 2 years, again, the doubling of the capacity will
Sure.
be there. So from 6 gigawatt to 19 kind of a gigawatt. The, based on valuation and the arithmetic of the profitability projection, which we are having for FY27, around 2,800 odd crores of profit we are expecting. The valuation wise, 145 is a one-term, 1 year kind of a price target for that company. Going forward, as capacities come up, we can keep on re-rating and revising the upside price target.
Okay, markets have started to take higher, 25,160, 56 points higher in trade. So the Nifty has opened into the green. You can also look at the broader markets, the mid and small caps that have opened 0.3% higher in trade today, almost 0.5% higher for the small caps. It's the IT index that's soaring higher, 0.6% higher among the heavyweight stocks that's pulling up the markets up. The NSE advances to declines ratio is also towards the positives, 1480 stocks on the positives, whereas 213 on the declining side. So we are looking at a positive opening across the board. Nifty Bank, however, is absolutely flat and is hovering around the flat line at this point in time. You are seeing some dips on the PSU banks today, 0.06% lower. Financial services also slightly lower in trade. That's leading to Nifty Bank flat with the negative buyers. Consumer durables also slightly lower, but you have metals that are now shining bright, 0.5% up. IT, real estate, oil and gas, these are the pockets that are up. On the Nifty, you have Grasim as the top mover, Bharat Electronics from the defense space, Dr. Reddy's, Ultratech cement space clearly buzzing right in the opening in trade today. Apart from that, private banks like Axis Bank are doing well. Shriram Finance, NTPC, ONGC, these are some of the commodities that are also hovering higher. What's not doing well? Asian Paints, 1% lower. Power Grid, Titan, Tata Motors, Eternal. These are the stocks that are seeing some kind of a pullback in the markets. You can see some kind of a weakness here. PSU stocks are 0.5% higher for the index. BEL, RVNL, HAL, NTPC, GAIL, BHEL. These are the stocks that are doing well in trade. F&O stocks, you have Grasim, Coforge, United Spirits. These are the stocks that are hovering up. On the broadest index, let's look at the strong movers today. Kokuyu Camelin, 10% higher in trade. Coffee Day Enterprise is 10% higher. Somani Ceramics, it's been on the move for the last couple of sessions, 10% higher. ITD Cementation, again, the cement basket is something that we will definitely focus on today and discuss with both our guests. Let's also look at some other stocks. Everest Industries is up in trade today. Protein eGov Technologies, that's also up 5.5% higher. Order flows coming in. You also have some other stocks that are buzzing in trade from the jewelry space as well. That's also something that we can definitely keep an eye out on. But let's welcome Mr. Prashant Tapsi, Senior Vice President Research Analyst at Mehta Equities, now joining in. Hi Prashant, warm welcome. Tell me, how are you looking at the market opening today? What catches your attention right in the opening in terms of sectors and stocks?
I think markets are still in a very positive session. The undertone is very strong. I think there may be some kind of profit booking again taken on many sectors, like defense can be one sector where profit booking can be a reason why stocks are under pressure right now. But there are a lot of stocks on sectors like NBFCs, gold financing companies, and even renewable stocks. Their stocks are still buzzing very good as a long-term investment. So overall, the trend is very positive. I think technically the upside would be limited from the current levels. I think 25,350 can be a resistance for overall sector or Nifty, and 24,850 can be a support for the overall market. That undertone is very strong.
Okay. Dharmeshi, what about the cement space? What are you really looking forward here? Today, there's a Morgan Stanley report on both Ultratech and Grasim. Overweight rating on both. Target price that has been raised for both. Target price for Ultratech now at 14,000 from Morgan Stanley. For Grasim, it's at 3,500. Now, for Ultratech, it believes that it will be a compounder over multiple years, strong volume growth potential, multiple revenue levers that are at play, cost optimization which is at play, and premium valuations are justified at this backdrop is what they believe. For Grasim, they believe again multiple opportunities playing out that could lift the stock price for the medium term. Further value being unlocked for the paints business, they believe. Strong earnings compounding at Ultratech Cement also. And they're also saying new age business scaling up fast, holding company discounts to also continue to moderate. How would you look at all of this aspect playing out for the large cap cement players like Ultratech and Grasim? And also how will this percolate to the mid cap, sir?
Yeah, all the points well taken out there. I mean, they are macro points and which will be played definitely over a period of say 3, 5 years going forward. So no doubts whatsoever out there. Valuations historically, cement has always enjoyed a very high premium valuation, and they are likely to do so going forward. It's a trading play. It's always a cyclical trading play from here on. I don't think it would be a multi-bagger kind of a wealth creator, all the large caps. Though, having said that, my preference would be more on Ambuja Cements rather than going by a Ultratech or a Grasim because there's some delta left out there for a catch-up valuation rally to take place. This season, monsoons are definitely, I mean, it's a dampener season for cement because most of the real estate constructions gets stopped or they have, problems out there in getting the education. Infra still gets carried on. So I think this is a nice time to get your investment bets, I mean, trading investment bets into place for in the cement space. Volumes should definitely pick up because now this policy move has also been there. Having all this in regard, my topic from the space would be Ambuja Cements to go forward with. Ultratech, you can have, I mean, if you want to buy both, then maybe 70% allocation to the Ambuja and 30% to Ultratech and carry forward. Grasim, as of now, holding company discount factor, which they have highlighted. I mean, this has been there for 15, 20 years. I haven't seen this discount gap in any of the holding companies getting bridged. So, and this paint theme, let it play out, but that's a void to my mind. I would rather go for a pure play, and there I think Ambuja stands far better.
Okay, got that. The sector that I want to come to, Prashant, with is the IT sector. Prashant, how are you looking at this, pick up again that's taking place on the IT space as of now? The question is, will it be sustainable? Right now, 0.8% higher. We are seeing a whole host of stocks that are buzzing. Coforge is the one that's definitely taking it away. From last couple of sessions, we have been seeing some momentum come back to the IT space. How is your fresh approach here?
I think the microeconomic data on the Western countries are improving, and that is giving a lot of positivity for companies in Western countries to spend more than what the earlier guidance was. So I think that is the one reason why Indian IT companies are getting very much positive. And already the run-up has already happened of 5 to 6%, but I think the rally will continue towards 40,000 in the Nifty IT as an index target. But in this space, I think I would like to go with Infosys as well as Tech Mahindra. These two stocks looks very good for me on a trading bet, not on an investment bet right now because already the small kind of rally in the large cap and the mid cap has already happened in the IT space. So two stocks, Infosys as well as HCL, Tech Mahindra.
Okay, got that. So that's the IT space for you. Dharmeshji, I want to come to you with the NBFC space as well. Especially, let's start off with the gold financiers, Manappuram and Muthoot Finance, that started their pickup rally yesterday, and again they are continuing the move today as well. Manappuram is the top mover on the FNO space with over 5.5% move. Now we do know that there was clarity from the RBI as far as the gold loans are concerned. That was one key trigger. But is anything changing structurally? Remember, in the recent past, these stocks have also given up a lot of their stock price value, and that's after there was a lot of confusion about stringent measures being implemented by RBI on gold loans, newer guidelines coming in, and finally, now that they are lenient with less than 2.5 lakh of gold loans, with both credit lines that will be offered, and of course increasing the loan to value as well. How would you look at these companies, sir?
I mean, the tweaking in the drought policy is favorable for both these companies, and but most of the upside, I think, has already been captured in the stock price. So, and let's not forget, even with tariff things settling down, we can have a correction setting in the gold prices itself. So this LTV thing can again get resetted because of the correction in the overall gold price. So by again, the advice would be same as has been for the defense companies. For traders, it's time to take profit, and even for investors, I mean, it's time to get out of gold finance companies and get into a diversified kind of NBFC place. So where gold loan opportunities also there, and even now banks are up with the same kind of regulation. So maybe a federal bank, which is a 10% of their book into the gold loan itself, a better place to look at where you are having all the plays bucketed into the same basket. So, uh, I mean, for traders, the advice is very clear. Book out of both these companies, Manappuram and Muthoot. and play the same theme with, banks and other NBFCs.
Okay, fair point. So that I hope has given some thought to all our viewers to also munch on as well. Apart from this metal space, Dharmesh ji, how would you look at the metals pack? What's happening here, do you see?
See, actually, again, the good thing about metals is initially the fear was because of this tariff thing, the prices may shoot up with currency
Yes.
volatility and everything playing up, and that will eventually push the demand down. So it can be artificial pickup on the price, but the volume drop will have these companies into a problem where the profitability may not be there, which is not the case right now. As we speak, except copper, all the metal prices here till date are negative basically. You look at steel, aluminum, zinc, tin, rubber. I mean, anyways you look at it, they have not risen. The copper prices have gone up. So this is a big positive for metal companies, and with every central bank coming out with a multi-policy incentive, so which is a pro-growth, this will take care of the global growth scenario. So I think it's a time to get invested into metal base. It's for braveheart. For traders, you need to be a braveheart. But for investors, if you're an investor, you can stay invested. And the top two picks out there, to my mind, from the ferrous, it is JSW Steel. It's a good play. It's a completely domestic centric kind of a play where you
Okay.
don't have an asset exposure. And the other is Hindalco Industries, wherever solid aluminum and copper playing out in the Hindalco industry. So these two companies one can look into.
Fair point. Prashant, coming to you with the mid and small caps question there, broader markets which have been outperforming the benchmarks in this recovery rally. Are you spotting any stocks there, a theme there that one should definitely look at right now?
I think one should go with the stock pick and choose, not with respect to sectors again, because the
Okay.
theme is already done now. I think Q4 earnings were better than expected in the mid cap and the small cap. So such kind of rally has been expected, and such kind of valuation stretch can also be seen in the sector. So, but there are two three stocks like EPAC can be one stock in the small cap company, small cap sector, which is into outsourcing of AC equipments. So I think the valuation as well as the price, both way the stocks have been already bottomed out. So 355, 360 can be a range to start buying it with the stop loss of 345 and a target of 367 or 380 for a short period of time. Even again, I think PPL Pharma can also be a stock with a very limited downside in terms of valuations. I'm very much positive on that. So PPL Pharma can also be one stock for a short period of time for a traders for an opportunity. I think 3-4 stocks can be a opportunity to go for. But again, mid cap, small cap, there is a stretchful valuations which already we have seen right now.
Okay, fair point. I hope this has also helped all our viewers understand. Last few minutes before we let you go, Dharmeshi, help us understand what is your focus right now. We are already nearing the first half end of the calendar year. How are you setting your, strategies for your clients for the second half of this calendar year, sir?
Yes, actually, it's like a diversified kind of a portfolio with it. I mean, 90% focus is on the domestic consumption, and there I think public sector banks looks very attractive. So two banks which we have put in a large cap and one in the mid cap or a model portfolio. One has been the Bank of India, other is Bank of Baroda. From renewable energy space, we have NTPC Green Energy and Wari Energy is the other two picks out there. Automobiles, we have chosen Hero MotoCorp and Mahindra and Mahindra. Defense, we already had been biased in BEL and HL. So now we are not pushing it harder for the defense space. And one can look at outliers, I mean, single entities like LIC. Yesterday, the numbers came for the month of May. It was a very strong set of numbers from our public sector undertaking as far as the new businesses premiums are concerned for LIC India. And you can also look at Reliance Industries and Axis Bank from the large cap space. So a diversified, focused portfolio, completely into domestic consumption. Only one exception being Hindalco from the metal space, which has a US exposure as well. So this is the theme we are playing out for next, say, 3 months or so.
Okay, fair point, Dharmesh. Always a pleasure to host you with us and seek your insights on the markets, your valuable, probably the views that you share with all our viewers, help them
Thank
all
you
out,
so much.
clarify their mind always, and pick the right strategies. Thank you so much. Appreciate your
Thank
time
you.
with
Thank
us.
you.
All right, Prashant, we'll continue our conversation with you up to stock spotting now. First 15 minutes of the candle is already formed. What is the sense here? It's the Nifty bank that's actually slipping away. Just profit booking, or is there more to go for this one?
I think just a trading market with respect to profit booking attempt by the traders right now. But again, things one should focus more on the PSU sector right now. Private banking may see some kind of profit booking again.
Yeah.
SBI, Bank of Baroda, as well as small UCO Bank and all these stocks are looking very attractive right now.
Yes, you're actually seeing a swift slipping into the markets across the board. That is the Nifty Bank now lower in trade. You also have spaces like financial services, consumer durables, both PSU private banks, real estate, FMCG. Slight pharma stocks as well that are now slipping in trade, barring IT, metals, oil and gas, small caps, autos, and mid caps and small caps. Rest of the pockets are actually now turning very, very volatile in trade at this point in time. Let's quickly spot for all our viewers the index contributors. I think that should give us some sense of how the stocks are moving. It's HDFC and ICICI that are contributing to the declines right now as far as the Nifty is concerned. We're also looking at Bajaj Finserv, HUL, Bharti Airtel as the other stocks that are dragging and weighing on the sentiments as far as the Nifty is concerned. Grasim, Infosys, BL, TCS, NTPC, Ultratech Cement, those are the stocks that are contributing on the positive side, although the quantum is very less. So the cement stocks, IT stocks, slight defense names, power names that are moving up in trade. Have you been noticing the power space at all, Prashant, of late? The likes of NTPC, Power Grid, PFC, REC are erstwhile favorite names as well. Even when we move forward to a Tata Power, Adani Power, Reliance Power, the renewable energy basket as well, what's happening here on the power space? Remember last time around the same time, we were going gung-ho on the power theme. And this space was something that everybody was focusing big time on. Of course, then came an 8-month long consolidation. What's your fresh approach here?
Overall, the theme will still be very optimistic for a long-term investor, but obviously from last 2 to 3 months, the rally has already happened in the lot of power sector. But I think now again because the monsoon season is very much near, and I think the demand supply of power will be very much matched with the production of electricity. So I think the limited upside from the current level, the demand and other things, so that will keep a lot of stocks under profit booking pressure. So for a very shorter period of time, 1 or 2, 3 months, I think power sector will be consolidating right now, but we may not see any big trigger going forward.
Okay, fair point. I hope one has really got an idea there as to how to look at this aspect currently. Let's look at some of the other key stocks that we can probably spot for all our viewers. Let's look at the broadest index. Anything in the Nifty 500 that's catching your attention today? A lot of mid-cap cement names are also buzzing along with the large caps. Would you pay attention to that space?
I think yes, because of the large, big reports from the institutions which are saying, cement sectors are going to pick up very soon. Because I am very much positive on the housing sector for next 1 or 2 years. So obviously, cement would be the mother of everything. So overall, valuation-wise, I think things are very much comfortable right now. Maybe a short-term 1 or 2, 3 months can be a sluggish period for cement sales or a flat sales for cement. But again, in terms of valuations, I'm very much comfortable right now. In this, again, Ambuja can be the first pick. One should look out for a trading opportunity as well as an investment opportunity. Again, Star Cement or Orient Cement can also be a small cap stocks. One should focus more on an investment perspective.
Okay, so that's again on the cement story that continues to build strong at this point in time. Keep an eye out on that as well. Let's also find out about some of the other pockets. Is consumption on your radar at all, Prashant? Are you looking at some FMCG names? We do know it's been a long haul of an underperformance for this entire space. Slowly, some signs emerging maybe on the liquor space, within the consumption basket. Consumer discretionary, of course, rather than the staples that are moving up. But how are you looking at this entire space? Is there any sign of a recovery?
Not yet. I think Q1 earnings should be the first, sign where we can see where consumption as well as the other spending pattern can be seen. So post the budget of almost 12 lakhs pre-tax, I think the focus would be more on the consumption spending. But again, Q1 should be the wait and watch for me until unless the stock doesn't, the sector doesn't give me some kind of volume growth. So I will not be very so positive on the sector. But time being, wait and watch for the sector.
Okay, got that. Let's look at some of the hourly gainers. I think it's the media stocks that are doing well. You have Z Entertainment that's up. You have some of the other stocks that are buzzing within the, top movers as far as this hourly movers are concerned. Coforge, we've marked Affle India, Manappuram Finance, Premier Energies because of that block deal too, Netweb Technologies, Hindustan Zinc, Emphasis again from the mid-cap IT basket. These are the names that are hovering higher in trade today. Let's also pull up some of the stocks when we can look at within the top losers basket as well. Let's just try and figure out if there is a trend there. JM Financial is weak, Indian Bank, Coromandel International, Capri Global, Westlife Developers. These are probably profit booking of sorts that are taking place because some of these stocks were actually hovering much higher in yesterday's trade and they are seeing some profits being taken off the table at this point in time. Let's look at the mid-cap names where some action can be seen. Again, it's Nalco, Hindustan Zinc, kind of metals, mining names that are hovering higher. Ola Electric today slightly up in trade within the, those new age tech basket today. That's the one that's moving. Let's discuss this one. How are you looking at the new age tech basket right now, Prashant? We've been seeing Zomato and Swiggy in focus over the last 1 week, 10 days odd, recovery coming in, smart moves also coming in here. But is this also getting extended to the other stocks within the same?
And no, I think Ola, not Ola, Swiggy and Zomato can be very much focused on a positive way. I think
Yeah.
the industry is going to see some kind of changes in the structural fees pattern. So they are going to charge some prices for long duration, long delivery products. So I think they can make some kind of profits, and then the EBITDA can be better than expected in the going next 1 or 2 quarters. So Zomato, the already the rally has happened. I think Swiggy can be no, seen as a trading opportunity for a short trade. 375, 380 can be a target for 1 week, 10 days as a positional trade. So Zomato already moved up, but Swiggy, there is some kind of room we can expect the move. But overall, I am very much positive on the sector because of the growth, high growth sector. Again for me, for an investment perspective, again both should be the part of your portfolio with at least 15-20% of CAGR return for next 2-3 years.
Okay, fair point. I hope this is also given some sense to all our viewers as to how to go about it. But are you also looking at the commodity aspect? We discussed a bit on the metals mining space a little bit. If you could extend your views on that one, and also on the oil and gas. Again, crude oil prices have ticked higher again in trade today. How are you looking at this entire commodity space at this point in time?
The optimism output from the meetings in London between US and China, I think that is driving a lot of things in the metal as well as in the oil and gas. So I think when if the trade deal gets settled with all a positivity output, so I think a commodity space will be very much in action. I think China is the largest consumer, China is the largest producer of the commodity as a metal. So Tata Steel can be one stock one should focus more on the steel exclusive space. On the domestic front, again, SAIL can be a stock one should focus more on the domestic steel as metal business. On the oil and gas, again, I think gas would be a sector which I will be focusing more on. GAIL, Petronet LNG can be two stocks one should focus more on. I think the sector has underperformed from last 2-3 quarters in terms of in price actions. I think now the valuations are very much comfortable, and GAIL and Petronet LNG can be two stocks for trading opportunities.
Okay, we'll focus on that as well. Let's also ask you on Z Entertainment, do you have any fresh views? Because you remember last 1 year or so, there has been, a lot of back and forth, so many decisions with regards to the court, so much of volatility that the stock has also faced, uncertainty that the stock has faced. Are things improving for the better? Are you again looking as a trader, investor to have Z Entertainment back into clients' portfolios at all?
Very much, yes. I think the lot of sentiments of what we have seen from last 1 year has, or it is already behind us right now. I think only execution and performance, two things are pending in the stock. I think quarter by quarter, I think that is also improving very well. With respect to valuations, I think globally, if you compare Z with Sony and other big media names in the worldwide, where the content has so much of valuations, I think the cheapest stock in the worldwide media stock would be Z. Obviously, some kind of small hurdles can come now and then, but I think 120, 130 can be a great range for this stock to accumulate for at least 2-3 year of view. So overall, very positive on the sector as well as on the Z.
Okay, fair point. I hope this has also given some sense to all our viewers there. Let's look at some of the other aspects. Autos is something that we haven't discussed, and pharma is something that we haven't discussed today. So let's come to these two aspects. Again, on the auto basket today, the stocks that are hovering higher are names like Tata Motors at 725, 1% higher, M&M. You have Hero Moto, Eicher Motors, slight gains that can be seen across the board. Tata Motors, remember, even yesterday was in focus because of its 2-year outlook that it shared on the CV business, the market share outlook itself. But brokerage houses are divided on Tata Motors at this point in time. There are some which have continued with their underweight calls, but others that they believe Tata Motors will be on course for an improvement. How would you look at auto space at large, and what is your view on Tata Motors?
I'm very much positive on this sector right now. I think the rare earth magnet issue is out of the box right now. The government of India as well as China, they are in discussion, and I think the license agreement can be renewed very soon, and that would be very positive for the EV sector. And Tata Motors being the largest in terms of EV will be very positive. I think that is the one reason why the stock has rallied from last 2-3 days on a positive way. In the sector, I think from next 1 or 2 months, there will be some kind of sluggish sales growth. Most of the focus would be on the ancillary part. Again, with respect to the main brands like Tata Motors, Mahindra, I think the growth will be very much consolidating right now for one quarter for Q2 at least. But overall, the optimism in the demerger story in Tata Motors very positive. I think for next 1 year, the stock can be rallying towards my target of almost 900, 920 for next 12 months. So overall, very positive on this sector, and the negativity about rare earth magnet is almost out of the woods.
Okay. Now, pharma, that's the sector that let's look at as well. Again, today, Biocon, Dr. Reddy's, Glenmark, Cipla, Mankind, all of them are showing us some signs. But off late, what's been the trend and how do you foresee it going forward? So far, it was again the tariff talk impacting both export-oriented sectors like IT and pharma. Now that things are looking on a progressive side, we are 1 month away from the crucial deadline, but so far the statements have come in that yes, there could be some positive deal that could take place between India and China. In case that happens, how would you look at pharma?
Very positive. I think we will have some kind of concession rates when the deal is going to settle down. So obviously, pharma, the US cannot ignore India for their requirements. So obviously, that would give some kind of concession rates on the tariff, and that concession rate will be better than all the other countries which are also supplying pharma products to US. So for me, sector is almost near bottom. The only trigger is the deal which will complete very soon in next 1 month. So in this space again, Glenmark Pharma, Bindo Pharma, Biocon, Tata, again Dr. Reddy's. These 4 stocks should be highly focused as their earnings are most or supplied to US countries. So I think that would be the 4 stocks one should be focusing more on.
And towards the end, Prashant, I want to understand from you top choices that you are betting big on. Any key stocks that you could highlight for all our viewers today?
In the space of pharma or anything else?
Overall, in the markets, what have you picked up?
I think L&T Finance should be, a stock one should focus more on. And there was a news saying that they already bought a gold financing company, which was missing in their portfolio. So with respect to valuation, with respect to the technical levels, I think L&T Finance can be a stock to trade from the current levels with a target of at least 230, 240 for a short period of time with a stop loss of 175. Again, Jana Small Bank Finance, again, the stock is up 4% today on the back of news saying that, again, there is a news of applying for universal banking license. So I think Jana Finance or small finance with respect to valuations, again, with respect to technicals, I think there's a good levels to start accumulating these stocks. Again, BHEL can be one stock, I think, with respect to expected big order book going forward in next 1 or 2 days. So I think BHEL can also be a good trading opportunity from the current level. So these are the 3 stocks which we are focusing on our trading desk.
Okay, first half an hour nearly out as far as the trade is concerned. Gradually the Nifty is finding its feet above the flat line, 25,107 right now on the Nifty. It's the Nifty bank that's really not participating, and that's why you actually see a limited upside at this point in time. But 25,100 is still with us despite that initial hiccup and volatility. Prashant, for the day, what exactly is your thought as far as both Nifty and Nifty bank go?
So there should be a level one should watch in Nifty. 25,250 should be a level one should watch and then trade it forward. Otherwise, yesterday's low can be a stop loss for any traders to hold a positive view on Nifty again. But in Bank Nifty, I think there will be more selling pressure because Nifty has not touched all-time high, but Bank Nifty has already touched all-time high yesterday, 2 days back. So I think there will be a lot of profit booking attempts seen in Bank Nifty. There can be a short positions taken in Axis Bank, ICICI Bank, or even HDFC Bank when we want to have a short call. But on the Nifty side, the trade would be on a positive. This Nifty will remain under pressure due to 4-5 stocks which are common in Nifty as well as in the Bank Nifty because of HDFC Bank and Axis Bank. So I think will be very much flat today, but overall the trend would be profit booking in Bank Nifty.
Right. Okay, Prashant, thank you so much then for being with us on the program and of course helping all our viewers out navigate through the current trend in the markets, the outlook as well as how to do some stock spotting and the sectors and the themes that they should be looking at this point in time. Always good to have you with us. Hope you have a fantastic time. We'll see you soon on another edition of Market Today. Thanks a lot for being with us. And viewers, now beyond the markets, of course the markets coverage will continue throughout the course of the day, but something that we helped you understand on the tech world yesterday, it's time to really find out what really happened at the Apple's WWDC 2025 event last night. Remember, the event delivered a powerful combo, the bold liquid glass visual redesign, significant AI enhancements, a complete shift to year-based naming, hello iOS 26, Mac OS 26 as well. And Lakshya is with us to help us understand what were the key findings, the biggest takeaways from this massive event. Lakshya, I'm sure you've been up the entire night trying to find out the key fine prints, and you're here up early. So sleep deprived, but worth it?
Oh, absolutely. 100% worth it. We live for days like these.
Absolutely. So tell me, what do you think of the Apple? Has it struck the right chord and balance when it comes to beauty, privacy and practicality?
Look, 100% Sakshi. The keynote last night, WWDC, is not just about how things look and changing the visual appeal. It's a strategic step forward by Apple. With Liquid Glass, they made the UI consistent across all of their platforms. So be it iOS, iPadOS, macOS, even watchOS, and it's of course inspired by visionOS like we had discussed in yesterday's show as well. Under the hood, they didn't talk about how Apple Intelligence revolutionized the game like they did last year. Instead, they focused on practical AI enhancements, experiences like live translations across your calls and messages, updates to visual intelligence, and more quality of life, tiny updates that make your overall iPhone, iPad, watch, Mac user experience even better. The keynote is the keynote that once focused on bells and whistles is now prioritizing real user gains.
Absolutely. So Lakshya, now let's drill down to just the iOS 26 for instance, and let's try and help all our viewers understand beyond what everybody is actually seeing on the visuals, what really stands out when you talk about the user-friendly features that truly will improve our experience of using iOS 26.
Oh yes, 100% Sakshi. Look, I have right here a long list of features that we as iPhone users will get to experience once iOS 26 comes to life. And there are some things that I would like to point out. On the lock screen now, there's a new spatial image feature, spatial wallpaper. So basically, Apple will use neural engine on our iPhones and create a 3D sort of effect. So once you're moving your iPhone left to right, once you tilt it, you'll feel that the picture's actually moving. Okay. It's incredible how they're going to do it, but yeah, that's the new feature. The camera app, which users felt was really cluttered, has now been cleaned up. There's a new redesign. So Photos tab, Videos tab are separate, and the liquid glass design is also prevalent there. And last year an interesting thing happened. Okay. Apple redesigned the Photos app completely, and they faced a lot of flack for it. So this year they went back to the previous design.
Okay.
Yeah.
So probably a lot of demands being met there of going back to that feature, but exciting things that you're talking about. I'm sure a lot of tech enthusiasts like you will be already waiting to try their hands on this new iOS 26 and the other software updates that we are getting. How and when do they get their hands onto it?
Look, the developer beta is already out, so people who are developers or who want to really try and get onto iOS 26 right now, they can do it. You can just head into your settings, go to general software update and install the beta, but I highly recommend do not install it on your main device. This is going to be filled with bugs and there will be lots of issues right now because it's meant for developers to test and give feedback to Apple. So public beta comes out in July. That's when most people like you and I can start using it on our devices. But then again, even that will be filled with certain bugs. So it's advisable to use it on a secondary device, not your main device. And the stable versions, of course, come out in September once the new iPhones and other Apple products release. So that's when all of us can get to try out the new versions.
Okay, so thanks for giving that clear advice there, but I don't know how many of us will be able to restrain ourselves from downloading that one, but clear advice coming in. Hold on, otherwise you may be facing a lot of bug issues there. But thanks a lot, Lakshya, for covering this entire event for the viewers of Market Today and helping them understand, because a lot of them are also users of the Apple products. So this definitely comes in as a big piece of advice and information that they will cherish. Thanks a lot. Keep your eyes glued on, and of course the next big event that we will be tracking from Apple will be in September. Stay tuned for that too.
Apple's big event WWDC 2025 is set to kick off on the 9th of June, and